Hello, ladies and gentlemen, and a very warm welcome to today's webinar. We have a fantastic insight from AutoRec and also a case study from IBM revealing how to optimize reconciliation and cash applications in complex shared services environments. So, I'm Matt Garrow-Fisher, Head of Research at sharedserviceslink.com. Now, just to give you some background about us, we set up in 2007 with one sole objective, and that's to provide best practice information for the finance and accounting shared services market. And that's through our conferences, our webinars, reports, news, and our fantastic website. So do become a member. It's free, and as a member you have access to a wealth of fantastic information. So as I said, today we are focusing on optimizing reconciliation and cash applications in complex shared services environments. So in a moment I'll hand over to Jim Muir from AutoRec shortly, who's going to introduce you to the agenda for today. But first I'll explain a little bit about how this session actually works. So it's a very straightforward platform. Now, many of you have probably used it before, and if you've got any technical questions, we do have a technical support team on the line ready to assist you. So please use your free text box in your GoToWebinar panel for any help on this. So, why are we all here? Well, we're all on this webinar for a very important reason, and that's to gain relevant, practical tips on how to optimize your reconciliation and cash applications. So really, to gain clarity, you should listen to some of the top industry experts, and we have them here today. So please use this opportunity to put forward questions to me and also the experts on the line. Now, how that works is very, very simple. You have a free text box, and all you do is submit your questions to me via this. Then they will come to me, and I'll distribute it to one of our experts in the last few minutes of the call. So, I really urge you to use this opportunity to get answers to those burning questions that you have. As I said, this is very much a two-way dialogue, so please do, take advantage of that. And just to let you know, the sooner you send your question to me, the more likely it will be asked. So, please follow up with our experts as well after the webinar. Their contact details will be emailed to you straight after this. Also, there's a lot of information in the slides today, so make sure you listen carefully to our speakers and really use the slides as notes to refer to after it is ended. You'll get all the slides from our website. So, without further ado, it's over to our first speaker, Jim Muir from AutoRec. Over to you, Jim.
Thank you, Matt. Good afternoon, ladies and gentlemen. Today's agenda is clearly split into two parts. I shall conduct an introduction, describing a bit of background as to where we've come from, the journeys we've enjoyed and the experiences we've had. Then I'll introduce some of the products and services that we provide to shared services centres clients. We'll talk about what makes a good business case and how we deliver the business case. And then we'll do a quick talk through a European shared services centre that needed some support in getting some extra value from an ERP deployment. We'll then pass over to Tim, whose emphasis will be very much in the order to cash space and what we did for and with IBM to accelerate cash applications in their business process. Before we start though, I'm going to pass you back to Matt, who's going to ask one of today's first poll questions.
Thanks, Jim. And as Jim said, we have a couple of about 3 polls today, and the first poll for today's webinar is this. Can you answer this question? I've signed up for today's webinar because, and select as many answers that apply to you from that list below. So I've signed up for today's webinar because my reconciliations are manual and taking too long. My reconciliations cost too much to prepare and require write-offs. I'm reviewing our fast close procedures. We are considering outsourcing or insourcing and want to understand what controls Autorec provides in that process or journey, or our credit control is adversely impacted by the time it takes to identify and post receipts. So if you give me the reasons why you've signed up to the webinar, we're closing the poll in 3, 2, 1. Okay. So just over 70% of you answered that poll, and I can share the results with you now. So the vast majority of you actually say that you've signed up because your reconciliations are manual and taking far too long, over 50% of you. Also, half of you say that you're reviewing your fast close procedures. And almost a third of you want to understand what controls Autorec provides if you were to go the outsourcing route. And then smaller, about a fifth of you say your credit control is constrained by your receipts handling, and about a tenth of you say your recs cost too much to prepare, or you require write-offs for that. So back to you, Jim.
Thanks, Matt. We're going to talk a little bit about the journey we've been on and some of the clients that we work with. You'll see a selection on the screen in front of you, from telcos to corporate travel organisers to private medical insurers, publishers and events companies, and a major global bank. They all have one thing in common, and that is that they are typically complex data environments. They have multiple systems, and those systems require reconciliation and some consistency. Our product, in terms of the reconciliation engine, has been around now for 15 years, looking principally at high volume data environments where transactions management is really difficult. And from the back of the initial deployment, from the original days when it was a reconciliation tool that had its own management information, its own case management, its own workflow, we've had to develop alternative uses of that engine. Now, Tim will talk about how we have accelerated and improved the matching of remittance advices to the sales ledger, therefore giving a degree of confidence in the sales ledger numbers. And I'll talk a little bit more length on the reconciliations. Our product set starts off with the core reconciliation tool, which was called Autorec, and Matt's going to bring up a screen shot of that just now. And we know that shared service centres and in particular are interested in productivity, and one of the things that we've very much focused on is a common and consistent look and feel, no matter what the reconciliation is for, that mirrors and reflects pretty much the behaviours of Excel. You'll see that Excel iconography across the top, and you can imagine how this works. You click one at the top, one at the bottom. In a typical deployment, we might achieve 95% automated matching. And so what you're seeing here are things that could not be matched by a business rule and required some manual intervention. In response to the increasing demands of Sarbanes-Oxley and third-party confirmations, we developed called Recognize. And what Recognize does, it sits over the top of the reconciliation engine, shows the status of sign-offs, it segregates high-risk accounts, low-risk accounts, and it shows who's responsible for what action on what account at any given point in time. Uniquely, we think, the ability to click through from this view of the general ledger into the detailed substantiation gives a very powerful attestation and substantiation tool on a single platform. In response to one client in particular, we took the Autorec skills, the sourcing data from anywhere, the exploding bulk items, the enriching it, and matching it and producing output, to develop the product that Tim's going to talk a little bit more about today. We call this product Vanguard. It's a sales ledger cash allocation tool, and it takes a remittance advice in any format. It creates an electronic version of that remittance advice, and it matches it instantly to the sales ledger. And of course, that in itself, the instant posting of it, the deductions management, and so on and so forth, means that the following day credit control has a very up-to-date picture of the position as of that precise moment in time with regard to customer payments. And of course, that in itself will reduce the DSOs and forms a big part of an ancillary business case. Talk a bit more about the business case later on. All of our product set is supported by a very flexible performance management and reporting tool. We'll show you some examples here. On the left-hand side, you'll see a front screen for reconciliations that's got that the red, amber, green status, directing attention, again, productivity and performance, to the things that matter most, the things that are most delinquent. And the other insert is an example of a reconciliation header sheet with a little sign-off button there to allow the escalation of perhaps some automated output, such as a journal entry using the same concept, or the signing off of the reconciliation itself. So we like to think that we've thought of all the key features and functions in a single place that don't just identify the exceptions, but actually identify who's responsible for resolving the exceptions and getting to them as quickly as possible. So this slide here sort of summarizes the whole AutoRec proposition. You'll see down the left-hand side here this ability to source data any format, anywhere, minimal existing disruption to your existing IT and data sourcing. Let us take care of that. Exploding any bulk amounts because we know the devil is in the detail, giving us a very granular database and no unmatched bulk items, no need for supplementary systems. Enrichment to help us optimize the matching performance. We'll take in extra attributes, for example. We'll take in stakeholder information so that email alerts go direct to stakeholders, not only those responsible for rectification, but those who are interested in a particular break type. And then finally, those outputs. And in the middle screen of the right-hand side, a typical MI dashboard showing the types of breaks, who's responsible for resolving them, performance, and so on and so forth. The business case, though. The business case tends to be predicated on the savings on FTEs. And in our deployments, typically within 6 months or so, the number of FTEs involved in directly handling reconciliations falls to about a half of the previous number. More typically, in a short space of time thereafter, that will fall again by a further half. And so we would typically build a business case to save 75% of FTEs. We license the product, naturally, but uniquely, we do not license for consumers of information. Only the people who exception management, those that record notes, those that ask for something to be done on a particular transaction, pay the license, giving a very low cost of ownership and a very low cost to deploy. The mediation loop in the center, this identification, classification, and escalation of breaks is vital. There is no point in doing reconciliations unless you know what the break is caused by and who's responsible for fixing it. And AutoRec manages that whole loop, measuring the time taken from identification of the issue to closure of the issue, thereby reducing the opportunity for errors to become embarrassing and therefore reducing the risk that you are unable to make a recovery or a reclaim. Down the right-hand side, you'll see some of the projects, shared services implementation, of course, cost reduction, insourcing, outsourcing, fast close, attestation, just suspense account management. But some of the themes that clients such as you come to us to help them resolve. There is a substantial library of white papers under those kind of headings, sometimes P2P, A to R, on our website at autorec.com. And that's a bit of an overview as to philosophies and abilities and capabilities. The vast majority of our clients become self-sufficient in the deployment of AutoRec. And we encourage the clients to become self-sufficient in AutoRec so that additional entities, additional uses, additional ledgers, additional accounts can all be handled by the business. I'm going to pass you over to Matt now, who's going to ask another poll question. Matt.
Thank you, Jim. And so we're just going to kick off our second poll of the webinar today, and that is benchmarking really where you are in terms of the level of automation of your cash allocations. So the question is, what level of automation, i.e. no manual matching of payments to open invoices, exists in cash allocations in your organisation? So is it none? Is it 1 to 25, 26 to 50%, 51 to 75%, or over 76%? So what level of automation, i.e. no manual matching of payments to open invoices, exists in cash allocations in your organisation? About 60% of you have voted, and we're going to close the poll in 3, 2, 1, and just bring up the results on your screens. You can see that around a third of you have automated by between 26 and 50% your cash allocations. We've got about a quarter of you doing between 51 and 75%. Only less than 20% of you are very automated, with over 76%, and just over a tenth of you are not automated at all. So back to you, Jim.
Thank you, Matt. And those statistics will certainly resonate with Tim's experience when we come to Tim's slides. I want to talk a bit about, though, before we go on to Tim's cash applications, about a particular shared service centre that had a number of data issues, and of course one sometimes doesn't know where those issues are until you've started that journey of discovery, and hence the ability of this particular shared service centre to further investigate root cause and resolve root cause, inventoryize, if you will, the things that they needed to change, was vital to them. So the challenge was they had a European shared service centre, multi-currency. They had a line of business system that was a client administration system that was integrated into the ERP system but didn't quite explain at a transactional level what was going on. And so we had quite regularly and a bit of a plethora of inconsistent data mapping, a lack of definition around the purpose of accounts. They felt a very rigid chart of accounts that was handed down from on high in head office and home office, as they called it. They felt there was a lack of audit trail between the policy system and the general ledger. They had no sub-ledgers supporting, for example, outstanding claims, outstanding premiums. They had massive legacy systems data issues with a lack of front-end data control, so a new policy could be put on the system dated with an inception date of the year 1600. And of course, all of these are causing huge back-end reconciliation problems. The function necessarily started to sprout up little processes, homemade processes, and as a consequence of that, in due course, all the benefits of the shared service centre started to dissipate. The cost base went up, the finance function was understaffed, critical processes had to be given way to, at least critical as they defined it, for emergency processes around about reconciliations. There was no clear definition of which system fixes were critical, and of course the close periods started to stretch out. So what they asked us to do was install and implement some basics, some accounting basics. So we started to find some reconciliations, starting with bank, of course you do, and skilling the guys up on the use of AutoRec, and then some general ledger to line of business reconciliations. And then we started to separate out balance sheet and P&L accounts so that even divisional balance sheets could be managed, proper transfer pricing could be introduced, proper P&L accountability, proper cost allocation from the shared services business. All this being documented and supported because the staff were able to have time to think, define, write the best practice manuals, attach the best practice notes to the individual reconciliations, for example. We even developed a data warehouse for them to examine loss ratios off the back of them understanding the granularity of the numbers. So in a very short space of time, on a process that had taken 12 years to get to the stage it was at, we had very quickly turned it around. We had a fully auditable and explicable set of numbers at a level of granularity using the auto-rec explosions that they'd never enjoyed before. We'd faster MI, much faster MI, daily volume numbers, for example. We'd eliminated a number of the root causes, those front-end controls where people were putting their initials into a reference field, for example. We'd automated interfaces from legacy systems. We had billing and enrollment reconciliations as well as financial reconciliations. And we'd very clearly defined roles and responsibilities, not just for the reconciliation, but for the rectification of the reconciliation problems. And it was very clear from the MI that a lot of the problems existed outside of the finance function, something that the finance function had always said, but it sounded like a bit of bleating, really, rather than anything they could substantially point to and underpin. And that increased accountability for performance in the shared service centre actually resulted in a growth in business volume coming to the business overall. There was an improved level of service, an improved level of communication with the client, and so they were then in a position to start to absorb more volume and therefore justify the cost savings or even greater cost savings coming out of the shared service centre. So not just a single use, it resulted in many, many downstream benefits, and they've now been one of our longest standing clients. I'm going to pass you over to a more recent client who's going to take you through some of his experiences. So just about to go through the cash applications process as experienced by Tim at IBM. So it's over to Tim.
Okay, Jim, thank you. And thank you to everybody on the call for taking your time to join the webinar today. Hi, my name is Tim Klepp of IBM. I have responsibility for global delivery within the order-to-cash area, specifically within our global process services business. IBM is known as an IT company, and that's probably the first thing that comes to mind, questions around why IBM is talking about cash application. But we have a broad business and services, including business process outsourcing. In outsourcing, we address all the major process areas, F&A, HR, SEM, CRM, and we do that through a variety of locations. And this graphic here is just a depiction of some of our major delivery centers that we have throughout the globe. We work with our clients, whether we're doing cash application or any other process, to find the best fit for them in terms of the locations that work from a cost standpoint, from a quality standpoint. We pride ourselves on having a strong set of delivery locations that we continually evolve really to meet the needs of our client. Diving specifically into the order-to-cash area, my bailiwick, we deliver services across the entire span from order entry to reporting. With each client, we tailor the scope to meet their specific needs. But some of the highlights I just wanted to draw out in terms of our existing client portfolio. As mentioned, deliveries performed from a variety of locations. Predominantly for me, most of my delivery work takes place in India for English language work, and then in Central European locations for European work. But as for that, there's probably, well, I indicate 20 delivery centers. It's actually a little bit north of 20 delivery centers, 18 different languages, and a number of different countries throughout the world that we're supporting from, like I say, a mix of locations. In terms of client revenue, people typically discuss collections as the level of revenue that's under management. We have about $75 billion worth of client revenue under management for that purpose, and that usually includes working with clients and managing portfolios split between work that is retained by clients and work that is managed by IBM. Across all these areas, we have a very deep and continuing commitment to involving technology in our processes. That's part of the discussion today, and it's certainly an ongoing part of what we try to do across all of the order-to-cash sub-process areas. Evaluating technologies, evaluating ways to improve processes, either from a Six Sigma or a Lean standpoint, or through deployment of technologies at various points in the process. The net of what we try try to do across the order-to-cash process deliver savings typically between 30 and 60%, depending on the nature of where our clients are from a base case standpoint. The next page just discusses our the sub-processes that we deliver across the top. I'm just trying to draw attention to the cash application area. Since cash application is more transactional in nature, it's one where we do a significant percentage of our work with clients in cash application. It's one that tends to be non-controversial in terms of including in an outsource or a shared services initiative. So it's a big part of what we do. I indicate we have over 2,600 people working in order to cash, and cash application makes up a very significant element of that. And so it's one where we are constantly wrestling with the issues that take place in cash application and trying to find ways to deal with them. Some of the issues that we see typically across clients, I'm sure to many of the people on this call, they're very, 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 very familiar. A high level of staffing that's required to handle manual remittance information. There are a lot of industries out there, consumer products, automotive, where remittances can be very long and detailed depending on the relationships that our clients have with their end customers. And a lot of things, unfortunately, today still work in paper. And so staff are faced with very large and complex invoices that need to be input into ERP applications, and things take a long time and are prone to error. So that's certainly a major issue that we see across our clients. Frequently, we'll see customer service issues associated with time lags or backlogs of unapplied cash. People think of cash application ordinarily as a relatively simple and straightforward process. But if it doesn't work, if you don't have it down well, then the dispute process becomes very difficult because you're not getting the right information input up front, you're not getting things identified on a timely basis, and it certainly damages the collections process as you try to try to effectively work with the end customers, but you're actually not getting good information on your ledger because the cash isn't getting applied on a timely basis. Those are it's all sort of, I think, known and obvious issues, but they continue to happen, and trying to find better ways to make the process work in a more streamlined way up front and reduce or eliminate backlogs is key to making the whole order to cash process function at its optimum. And so some of the other issues that really have sort of touched on losses as a result of managing deductions poorly, poor matching rates, and then certainly when it comes time to audit, to prove out that you're managing things in an effective and an accurate way, it becomes difficult in a manual environment. So because of those issues, we're looking at a way of approaching cash applications across our entire portfolio. One of the key objectives we have with all of our clients is to move them into the top levels of performance relative to benchmark. Whether that benchmark is you're talking about cost per transaction or productivity or overall performance in terms of cycle time, we're really looking to move everybody to the top levels across all those. And in that context, we began looking for a partner in the area of cash applications to help us address the issues noted on the previous graphic. So some of the factors that we had in terms of our decision making were that we wanted a common tool that we could use across clients, something that would allow us to standardize cash applications and allow us really to create a factory model. So if you're working in a shared services environment, very similar to the type of environment that I work in, where you have different countries or different clients that are working on different ERPs, to be able to train your people once and have people be able to back up each other and work off of one common platform is something that we were really looking for, as well as to keep transition costs to a minimum. If you can train a person on one approach to doing something, then transition costs so many times just inhibit the process of bringing work into a shared location. But if you can minimize or ease that that training process, it just brings transition costs down significantly. As I alluded to previously, we're looking to ways to improve on the matching functionality implicit in the ERPs that we work with. Many of those environments are complex. They require the ability to use really multiple different parameters to do the matching, and AutoRec provided that and allowed us with flexibility and relative ease in terms of that flexibility of changing parameters or adding parameters to maximize posting effectiveness. And then overall, in terms of what we were looking for from an objective standpoint, is being able to drive productivity upwards of 40%. Jim talks about bigger numbers, and we've seen bigger numbers from the pilot tests that we've done, but we also wanted to do something that was realistic as we were looking at the evaluation period. So we landed with AutoRec. As we investigated the area, we found that they had a very good reputation and were more focused really than others that we saw on the cash application activity specifically. The customer base is very good, and we saw, most importantly to us, a couple things. One is a commitment to continue developing the capability, and also as we got into our pilot test, which came in at or above expectations, we really liked the working relationship. It's demanding environments, as I'm sure everybody on the phone is used to in terms of dealing with end clients within the organization or customers outside of the organization, trying to service everybody's needs, and you need a partner who can be flexible and help you work through complications, and we certainly found that with what we were experiencing with AutoRec. So I thought at this point then I would go into a discussion, a little bit more background on the data and how the process actually functions, just quickly. But the data, the way that we're working with AutoRec is we pull data in from banking organizations and then match that against, first is I guess maybe just talking about the data itself, getting the data population constructed is the payment data we're getting from banks, pulling in customer and transactional information, either from the client's ERP or from AR Collect. AR Collect is my platform that I use in IBM to run collections. So the extractions are either from both or one or the other in terms of completing the profile of data that you need for the matching environment. But once you've received the ledger information, then the remittance information is sort of the other thing that you need to do the matching. And that is either, if it comes in manually, there's a process of digitizing and OCRing it into AutoRec, or if it comes in through EDI or it's been pre-formatted by the lockbox, that's how the remittance information gets captured. And then you move into the process of doing the matching. So the matching is done at the payment level, and also obviously at the detailed individual invoice level. Any exceptions are exited by a workflow for investigation, and once the payments have been matched, it gets uploaded back into the client's ERP system. So it works essentially, the data, think of it as all the data from the ledger and the remittances are worked offline. Once the posting process has been completed, it gets uploaded back into the ERP system. So in the system of record, all the matching is then noted. In terms of the timeline for deploying AutoRec, we found it to be very, very quick. Think of it in three separate segments. Each of them basically 2 weeks. A period of preparation involving design workshops and defining requirements, configuration, defining what the extracts are going to look like from the different data sources and configuring the application, and then testing and training. Period of testing, a short training period that we found, and so from beginning to end, about a six week period. So a very good, very efficient process that we've seen. We expect that it'll decrease as we work more and more with it, but even as is, it was something that we were very, very satisfied with. And then The last thing I wanted to cover was just a little bit more detail on a specific experience with one of our clients. So in terms of background, the matching process was executing at about 50% roughly. 50 to 75% were auto-matched. They were requiring 25 to 50%. Other payments had to be researched and cleared manually. For the matching criteria that we have, they were predefined in the ERP, which is okay, but it tends to be unidimensional. And if you want to amend something, it's typically not easily done, even if it's technically simple. It's a process of raising tickets with IT and trying to get attention and get priority. So it just tends to be very difficult to amend things when you want to amend them. Instead, working with AutoRec, went through a process of designing exactly how we wanted the parameters to work. While they're flexible, we've had very good success with the initial parameters that have been defined. The team actually, as we speak, is working on ways to further improve them. But as we deployed, you see in our pre-AutoRec environment down the bottom to our post-AutoRec environment, some very good results with our initial deployment. If the different business units are reflected here, this is one company, one entity, but different business units reflected and the different ERPs in those units. But in each case, we saw growth and significant improvement in the level of auto matching that we've got across each of those different ERPs. So very good results, something that we're very, very happy and satisfied with. And I guess the other points that I would raise is the last bullet point under current status is there were elements that we hadn't initially considered or weren't initially using AutoRec for, but there was an intercompany process that we then deployed AutoRec to handle, and that was a process when we took it over was entirely manual, and it is now entirely automatic. So it's been the observation that we've had as we've gone through this is as people use the tool more, as they get more comfortable with it, and as they start to see the ease of use and the power that they're getting with the automation of any different sort of matching or comparison routines, that it starts getting extended to the different sorts of uses that people can find for the application. So it's been a very good experience for us, and it's one that we certainly expect to continue in the future. So Jim, that wraps my presentation. I'm going to turn it back over to you. Okay. Jim, are you there? I'm going to turn it back over to you now.
Thanks, Tim. Sorry, we were on mute here in London. A couple more slides to go in terms of the formal part of the presentation. So thanks, Tim, for carrying that. That's some fantastic numbers in there. The summary of the business case. What makes a good business case? Well, typically, having done a number of surveys pre and post AutoRec deployment, we see a profile of activity on the left-hand side there. About 50% of manpower in the typical shared services environment, reconciliation environment, is doing fairly rudimentary matching, fairly basic matching. You see the data sourcing, the scraping stuff out of Oracle or SAP or out of bank system, pre-reconciliation preparation work is quite a sizable chunk too. And very little of the relative effort is actually spent in correcting, remediating, investigating the problems, and quite often matches are done at a kind of aggregated, close enough type level. Post-deployment, we see a lot more emphasis and a lot more effort on the resolving the underlying data and the correction of the data. A lot less effort spent on rudimentary matching, that red zone there. MI is consistent, so what tends to happen is that there's better commentary in the MI, which is lacking in the very disparate and very devolved MI preparation that's going on. But the real story is in this reduction in actual numbers of FTEs to somewhere in the region of 50% within a few weeks of going live. And as I say, that would half again. But even after deployment, what we saw was that still more time was actually spent in resolving data breaks and the underlying data, so no longer was it acceptable to match a misspelled client name, for example. There are other side benefits to the business case, and Matt's going to click through them too. But importantly, we tend to not enumerate these. We tend to say these are intuitively what you're going to get, the benefits you're going to get from deploying a tool such as Autorec. But our clients would vouchsafe that they had enjoyed all those benefits. Importantly though, we don't just say that we do this stuff, we're prepared to prove it. And how we prove it is by developing a pilot with our clients, and typically we'll invest in a pilot process. We outline our rapid development approach. Some clients have deployed within a matter of 10 days. Bigger clients, a bit longer, naturally, depending on the complexity. But it's not untypical for a 380 group of companies, 380 company group of companies, to have their intercompany reconciliation process dramatically improved in 2-3 lapsed weeks, for example. We set out with a mantra of control your world, then change it. Data-driven approach, not specking on a wall all the data feeds, and irrespective of the incremental benefit that adding one more data feed or one more item of information is. We set the control standards not just for today but from 4 months' time, so that anybody who's already in that kind of orange comfort zone there, they know there's still work to be done, they've still got some hard yards to do to reach the ultimate control objectives of the business. Importantly too, we very much focus on delivering the capability to the client base, and therefore we have this objective in making it as easy for our clients to deploy, as easy for our clients to administer and maintain, and easier for our clients to roll out across other reconciliations. We call that self-sufficiency. Of course, many of our clients ask us to stay on beyond the initial sort of self-sufficiency phase, and we're very happy to do that. But setting that objective, letting the clients understand that the external cost is boxed in, is very, very important to us. That's the end of the formal presentation. I'm going to pass you back to Matt now, who's going to conduct poll question 3.
Thank you very much, Jim. And as Jim said, I just want to launch the final poll for today's webinar. It's just a quick poll. Would you be interested in a free one-to-one discussion with Autorec to discuss your shared service centre business case? So select one of these answers. Yes, possibly, please send me further information, unsure, unlikely, or no, I'm definitely not interested. So would you be interested in a free one-to-one discussion with Autorec to discuss your shared service centre business case? I'm going to be closing the polls in 3, 2, 1. Thank you very much, ladies and gentlemen. So, before we move on to questions and answers from our audience, and there's been several questions and answers, I just wanted to take you through what's going on at Shared Services Link this month. Next month. So we've got a number of webinars, and if you enjoyed this webinar, then please register for some of our other ones. We've got 3 there in November that you can see on your screen. We also have a number of fantastic conferences to meet your peers face-to-face. We've got the Accounts Payable Tech Summit taking place in December in London for all those accounts payable leaders and shared services directors and people in charge of purchase to pay. And we also have our big European summit for leaders in finance, shared services and outsourcing, a strategic shared services summit for people leading your SSO. So that's enough about us. Let's hear from the audience now for questions. So we've got a number of questions that have been sent to us, and the first question is for you, Jim. I know we talked about deployment timelines. Is there a typical deployment timeline, Jim?
There isn't a typical deployment timeline. One of the complexities in reconciliations is that many clients have got some term like draining the swamp or lifting the mist or peeling the onion on reconciliations. So we feel it's really important that what we do is we give the client a methodology, a process and a technology that they can use to resolve the breaks. And typically we can deliver that capability in well inside 40 days. And the clients tend to choose which reconciliations are the most important, the most pressing, the most risky, the most commercially sensitive. And we will work on those reconciliations with the client in the early days, and they dictate which ones we build for them in order that they can then work through the estate of all the reconciliations that they have to do. Typically 40 days. One major bank took a lot less time than that. The important thing is that when we set out with that program of work, if the client doesn't use the 40 days, they don't pay for the 40 days.
Thank you, Jim. Another question for Jim, actually. Do you offer hosted solutions with AutoRec?
Yes, we do. Typically, though, the clients will install the software in their own IT estate. We offer the hosted solution. There is software as a service as an option, but the vast majority of our clients tend to work on an installed base on one of their server farms or in their own office environment.
Thank you, Jim. Another question from our audience. What are the, I think this is for you, Jim, again, what are the maximum thresholds in terms of users to make this a viable business case?
Typically, any client site where there are 6 people taking a fairly average UK clerical member of staff's rate, typically anything greater than 6 can have a payback of same-year payback, and that's in perpetuity. So clients who would buy the software outright typically enjoy a 9-month, that sort of level. There is that's obviously an average, and it masks 1 or 2 clients who do it a lot faster. But teams of 6, really upwards, tend to enjoy fairly rapid and consistent paybacks. What tends to happen is they might start off with perhaps the cash apps team, and then they do bank recs, and then they do intercompany, and all of a sudden you realise there are many, many more people doing data matching and reconciliation functions in the business. So we don't preclude clients from a conversation because they say there are only 4. We have some rental models too that help some clients who are perhaps on a growth trajectory and taking on extra work. So there's a conversation to be had, but typically those that have got 6 people identified doing reconciliations, data matching, cash apps tend to be able to make a fairly robust business case.
Thank you, Jim. Another question about the system, and maybe, Tim, you can share your insight on this. How can the system automate, and on what criteria? And can you automate matching today's cash, or is it plus 1 day? Tim?
Well, we've used multiple different parameters. So typically, most typical parameter is using an invoice number, but frequently there are other reference numbers that are relevant. And the other real strength that we've seen is that many of our clients have complex linked account situations or parent-child relationships, and AutoRec has been able to look across, because the ledger data is all pulled in, understanding those linked relationships. AutoRec has been able to look across those different those sort of different parameters to find potential matches. Those have been some of the main things that I've seen. Jen, I'm not sure if you would point to other particular criteria that you see people using in the cash apps process, but that's what we've seen today.
Tim, I think I caught the tail end of that. The AutoRec constantly looks at all unmatched items. So as soon as the data becomes available, any number of flexible business rules, they can be precise matching, they can be tolerance matching, for example, in a cross-currency environment. AutoRec will apply those business rules to all unmatched open items. So if we receive a remittance advice last week, but we haven't received the cash, as soon as the cash comes in, AutoRec reconciles or recognises that cash relates to that remittance advice for that particular client, and it performs the routine. To give you a sense of how powerful the matching is, typically we would build and install a system that would do hundreds of millions of transactions an hour as a capability, which is usually far in excess of even the largest clients' requirements. In addition to the business rules, we also have some suggested rules which act like a form of artificial intelligence, if you will. There's suggested matches so that the population of unmatched items is stratified too. So things like spelling mistakes, looks like, sounds like, previously matched, even though it doesn't look like a match. These things are brought to the attention of the team so that they can, if you will, get the low-hanging fruit from the unmatched population.
Thank you for that, Jim. Another question here. Can you provide any examples of reconciliation of consolidated bank account payments and P-card distributions for P2P? I think that's one for you, Jim.
Well, thanks for that. In the same way that we can aggregate or disaggregate transactions for matching in bulks, we have several examples where the client has a consolidated bank account, one single global bank account, but it reconciles to several general ledger accounts. So as well as one-to-one and one-to-many in the transaction set, we can also perform that in the account set. I'm not entirely sure what the P-card reference is. I think it must be a payment card distribution for purchase to pay. In the purchase to pay space, there's some excellent literature on our site that talks about the supplier statement reconciliations and vendor management, and that might actually be a bit more appropriate to the P-card type arrangement. But there are several excellent examples on the website too of distributed bank accounts, consolidated bank accounts being matched to several ledgers on the other side. I think that's what the question represents. Maybe there's a clarifier coming here.
Sure. Okay, there's another question here. Does the automation system from AutoRec learn behaviour so that automation improves over time? I think, Jim, could you answer that one?
Yes, indeed it does. We developed some leading technology with Edinburgh University that suggests matches based on previous user performance. So if a user has previously matched a holding company record, because the payments come in from a holding company on behalf of a subsidiary, then AutoRec will suggest that match again to the users. That, if you wanted to make it an established business rule to again save even more time, then you can simply use a table of aliases to say that this is a proxy name for the subsidiary, so holding company is a proxy name for subsidiary, and then that becomes institutionalized in a business rule. Very important where you have perhaps a group of publishing brands being paid by a chain of newsagents, for example, and they want to see one consolidated payment from the newsagents or from the bookstore chain going to the global publishing company. So the aliases and the learned behaviour in that, including intercompany adjustments, I think Tim touched on them too, is all handled within the tool.
Okay. One member of the audience has said that their current bank details are basic. So they're asking what exactly is used to make the match. I'll give this one to you, Jim, but if you want to contribute as well, Tim, feel free to do so. So Jim first, please.
Thank you. Surprisingly, the banks don't tell you every piece of information that they have, and therefore when they push out your statement information or your bank account information to you, they tend to be quite minimalist in what they send. So for example, in our deployments where we take an extract from the banking system, usually through a client relationship manager, and usually not a day one process. So the day one process tends to be about automating what you currently have. But as we go into negotiations with the bank and we get a better data feed, we discover there are fields in there such as client identifiers. There are identifiers of remitting branches and remitting accounts. So if we receive a piece of cash in Tim's world, for example, that we do not know because we haven't received the remittance advice and we can't tell from the bank statement who paid it, by simply taking this extra attribute and investigating where that account's cash has come from, or that piece of cash has come from, we can look automatically at previous allocations from that particular remitting bank account and infer or suggest that it's the same client again, and therefore what you get is you get an immediate allocation of the cash from client A into their particular account. Okay, it doesn't necessarily match off against individual invoices until the remittance advice comes in, but their cash is applied to that account. Importantly too, Autorec will use that information to send an immediate confirmation to company A to say, thank you very much for the cash we received yesterday, it was $100,000. If you wouldn't mind emailing a remittance advice to autorec@ourcore.com, then we'll be able to process it and settle the invoices as per your instructions. Quite often a lot of background information held in the banking system, not published on the bank statements.
Thank you for that, Jim. Tim, I think this is a question for you. Do you have any FTE productivity numbers to back the savings or benefits, or any kind of comparable figure? Tim?
Well, like I say, we were as we were investigating the product and evaluating it, we were looking for a baseline savings of about 40% in terms of the specific posting process, and that has been borne out by, well, it was first borne out by the pilot testing that we've done, and then it was done. It's also been supported with the actual implementations that we've experienced. So that's what we've seen. You know, I think the expectations are that it will grow. That's what Jim and team are expecting as well down the road. But between 40 and 50% is what we have experienced to date with our implementations. And more importantly for me, you know, I'm constantly committing productivity to our clients as we establish relationships. And one of the important things about the auto-rec deployment has been that it happens very, very quickly up front. And so it's not a period of 4 or 5 years that it builds to a 40 or 50% level. You can achieve levels just very, very, very rapidly. And so that's been important to us as we've built business cases.
Excellent. Thanks, Tim. Just time for one quick question. You're going to have to answer this, Jim, in about 10 seconds. What is the accuracy percentage of the tool?
The accuracy percentage of the tool. We have achieved match rates of 99.8% in one client that was processing 5 million transactions a month. Interestingly enough, for the 0.2 that was left unmatched, they still required 15 FTEs, so a significant payback. The match themselves can be penny perfect to X number of decimal places. They can be precise matches, tolerance matches, defined tolerance in terms of absolute value or percentages. So that's the kind of accuracy stats I'm being slapped about here to pass the phone back to Matt.
Thanks very much, Jim. Well, I'm afraid we've run out of time for more questions, so please do follow up with our panelists today. I'd like to thank all of our panelists for a great insight today, and I hope you can join us in our upcoming webinars taking place next month, and also our events as well. We've got one in December for what promises to be an incredible 3-day event for idea sharing for accounts payable leaders. So I hope to see you in the future. That's all from me. Goodbye.